June 2025 changed the way Toronto real estate market reacted, and sellers misread the room. A lot of them actually tried to flex with their bidding wars, and that didn't go well. What we're facing right now, I think, is one of the worst times in the real estate market. Real estate is the backbone of the economy. Lawyers, real estate agents, renovators, contractors, suppliers, a lot of businesses are related to real estate. So all those businesses are hurting right now. If we see another 5% price depreciation next year, there's something drastic happening in the world. And this year, June, we had the lowest one in the last 25 years. Guys, before we go any further, please hit that subscribe button, hit that share button, and like it. And turn on that notification bell to get notified for the next episode. Now let's go back. June 2025 changed the way Toronto real estate market reacted. Sales were up, prices were down, and sellers misread the room. A lot of them actually tried to flex with their bidding wars, and that didn't go well. In today's episode, we're gonna break down the top seller mistakes, few of the myths that people need to know, and really break down what's happening in today's market. Guys, welcome to Reality Check, where we discuss what's happening in Toronto's real estate market, where it's going, and help you make informed decision buying or selling real estate. I'm here with Sanaz.
Hi, everyone.
And we're going to talk about June. Half the year is gone.
Gone.
I don't even know what's going on with that, because I was hoping in February we would have like a huge uptick in activity. And that did not go well because thanks to Trump. And we've been having like a record year each month, but in a negative way, because the sales have been like down every month drastically. Listings and active listings have been, high. Transaction volume has been super low. And the months of inventory has been growing steadily. And as we know, as the months of inventory goes up, it's good for buyers because they have more choices. But for sellers, it's not so good. And what we've been seeing lately is the number of transactions have been super low. We're going to go through the numbers, and we're going to actually this time dissect the numbers further, see what's happening in the buyer's market, what's happening with the sellers in this market, and talk about some of the strategies and tactics that both sellers should use and buyers should use. So let's get into it. So month of June, we had very similar to the month of May in terms of number of sales, but on a seasonally adjusted numbers, the sales were actually higher. But anyways, we're at 6,243 with the active listings being the highest we've had so far this year, with over 31,000 units. Months of inventory has gone up to over 5, and the average sale price has actually dropped to 1.1. So right now, so far this year, the highest point of the year price-wise was May. Now it's going down in terms of average prices. And I think, July and August, it's going to be lower anyways. The days on the market have increased to 26. And so we just want to also take a look at what's going on overall in the condo market. So the condo market prices have dropped by 4.3% year over year. Condo sales are lower by just less than 1%. We're at 1,500 sales. To put things in perspective, last year this time we were very similar in terms of sales at 1,520 units, but the average sale price was, over 30,000 higher. So the average sale price of a condo is dropping drastically. And we're going to get into that a lot.
Nima, talking about month of June, give us the top 3 trends in the real estate market in Toronto.
So what we're seeing right now in Toronto's real estate market in the stats is that even though the sales kept steady month over month, and they're pretty much at the highest level of the year, the prices actually fell year over year. So we had a 5.4% decrease in prices. Average price is down to about 1.1 million. So that's one. Number 2, we're seeing active listing numbers that we've never seen before. We have over 31,000 active listings. That's about 30% higher than last year this time, and it's twice as high as active listings 2 years ago. So this is why the months of inventory has gone up. The numbers, the actual sales figures are lower. The third trend that we see is that the price drop is sharpening, meaning the percentage that the prices are dropping has been the highest we've seen in the last few months, meaning we had 5.4% drop in the average prices. Over 6% came from detached market. Both semis and towns and condos dropped about 4%. So they actually held their prices pretty steady, condos and townhomes, whereas detached market had the highest drop in average pricing. I just want to go through a summary chart of June 2025. I got a few charts that are super interesting, and I think everyone needs to see these numbers. So I actually want to go through this chart that talks about the sales figure and number of transactions in the month of June. So for the last decade, the average transaction volume for the month of June has been hovering around 8,800. And this year, June, we had the lowest one in the last 25 years. We had it at about 6,243 units. Back in 2016, when the market was crazy, we were well over twice that amount at over 13,000 units. So with that being said, the average transaction right now for the last 10 years is we're below the 10-year average by about 30%. And just to put things in perspective, for the first 6 months of the year, the number of sales that actually happen in GTA are down 18% from 2024, which was one of the slowest months in the last 25 years. So if we're on the track to have the same trend for the remainder of the year, most likely we're going to have one of the slowest years in the last 30 years in Toronto, not to mention that the population has grown drastically. So
don't forget to share, subscribe, and like it. Thank you.
This is not good for the economy, not good for anything that's happening in Toronto, because real estate is the backbone of the economy in many sense, because construction is related to that. A lot of side businesses are related to that. A lot of people once you buy a property, there's a lot of things that happen. Lawyers, real estate agents, renovators, contractors, suppliers, a lot of businesses are related to real estate. So all those businesses are hurting right now. Overall, year over year, change is just about 2%. New listings, as we're looking at total new listings that came on the market, we had over 19,000 new listings come on the market in the month of June. And the total active listing is the highest we've ever seen in the last decade, over 31,000 new active listings. Last year, this time, we were at about 24,000. 2023, we were well below half that amount. So these are numbers to take into consideration. The 10-year average sits at about 18,000 units. So we're at 31,000 units right now. Another important indicator that we look at is sales to new listing ratio. So 2021, that the market was super hot, we were 68%, meaning 68% of the listings were selling. Right now, that was 2021 when the market was hot. Right now, we're sitting at 31%. So average for the last decade has been 50%. So you can really see why things are slow, prices are not growing. And again, moving on to another supply indicator that anyone should look at when they're pricing the home or if they're in a market to purchase is the months of supply. Months of supply right now is sitting at 5.1 months right now, which is buyer market territory. Last year, this time we were at 3.8. And if you recall, last year, things were still moving. Right now, things are very stagnant. Price indicators, year over year, we're 5.4%. And the average for the last decade has been about 6% price appreciation. So right now, based on what I see here, if the average is about 6%, we're about 12% below where we should be. So will next year be 12% price appreciation? I highly don't see it, but I think within the next 2 to 3 years, we should see a pretty good price appreciation. Guys, before we go any further, please hit that subscribe button, hit that share button, and like it, and turn on that notification bell to get notified for the next episode. Now let's go back. Like for the last 25 years, it's been about 7%. Last decade has been about 5.96%. So last year was minus 1.9. This year is minus 5.4. If the average price appreciation is about 6%, next year, it's got to be better than this year. If we see another 5% price depreciation next year, there's something drastic happening in the world that economy is going to get affected around the world. It's not going to be just Canada. So will I think next year is going to be worse than this year? Probably not. Will I see 12% price appreciation next year to cancel this out? Most likely not, but I think we're going to be in the single digit price appreciation because what we're facing right now, I think is one of the worst times in the real estate market. So let's talk about the condo market briefly as well, because the supply of new condos assignment are super high. We're expecting over 31,000 units coming into occupancy. Just in June, I heard we had over 2,000 closings, actual closings of condos. So right now, the months of inventory for condos, resale condos, we're not even talking about assignments, is at 7 months of inventory. So pure buyer market territory. And this is one of the highest level we've seen since the 2008, early 2009, the financial meltdown. What we're facing in the condo market today is one of the worst that we've ever seen. One thing that worth mentioning also is the growth in the sales under $500,000. I feel like last year we wouldn't see that many condos priced below $500,000. Now there is a lot of options, especially in downtown Toronto, prime location that you can buy. As an example, I saw a 1-bedroom plus den condo, 600 and almost 70 square feet in Richmond Hill. Great condo. They even had done some upgrades. That condo was hovering around $600,000. They had priced it at $499. It did not sell. They rented it. And when I approached them, they said, listen, you can buy it with the tenant. And we negotiate the price well below $490,000.
Let's talk about some of the mistakes seller made in June.
So let's talk about the top 3 mistakes I see a lot of sellers make. One is pricing their home. A lot of people are overpricing their home. They're taking into consideration the peak market back in 2021, 2022, and they're not considering the buyer market we're in. So that's one. 2 is a lot of active listings that I see that sellers are delaying price adjustments. So they're chasing the market and they will never catch it. So by the time they drop the price they should have been at has already been dropped further. In this market, you want to have your price drops well ahead of the market. Meaning, if you're thinking of dropping your price, let's just say from $1 million to $950,000, when you see a property sell for $950,000, at that point, it's most likely too late for you to drop it to $950,000 if you're a comparable house. So you should be dropping it below that because we're in a declining market. And what I expect happening for the remainder of July and August is the same trend. So if you need to do price adjustment, you need to do it in time. And third, which is the most important point for sellers, is skipping or rushing the preparation of your home. You need to make sure the property is in top-notch condition. All the repairs are done, all the renovation that needs to be done is done right. You've done your pre-list inspection and you have done your staging. Don't rush it. Get the proper pictures, do the right marketing, and bring it out. You're not going to miss out on anything if you delay your listing by a week or 2 in this market. So these are some of the points that I think as sellers you need to consider, especially in this market. You need to take your realtor's advice. You need to look at the stats. Don't just go based on your gut. See what's happening in your micro market. Look at what the average prices are. And this is why you hire a realtor. Take their advice. Guys, I think this is it for this episode. Thank you for watching. Make sure to hit that subscribe button. Share it with anyone that might find this useful and click that like. Thank you, and we'll see you next time. Bye-bye.